ASST is up 11.17%. This is Monday, the 5th of January 2025. It's a high beta stock. Volatility is expected to increase in the coming days, amongst other things. I think it is because of what we're looking at right now here. Okay, this is its January 16 option series. We can see here the stock is approaching $1, not far from it now, only for less than 4 cents to reach $1. And we have 76,000 here for the $1 strike, 220,000 for the $1 50 strike, $2 strike, 221, and even more. So we have been able to break all of that down. Okay, strive nears $1 with massive options activity, hedging flows in focus. So this we already know this. This in the post market in Friday's trading session, it exchanged 61 million shares. Short interest is 17% and have to borrow. Okay, huge call open interest. You've seen that already. Okay, you've seen all these already there. So the question is, what are market makers likely doing here? First principle: market makers don't want directional risk. When they say when they sell calls, they usually hedge by buying shares. This is called delta hedging. If the calls are out of the money, delta is low. Right now it is low. Hedge is small. Okay. As price rises towards strikes, delta increases. They must buy more shares to stay hedged. So, as the stock pushes toward $1, market makers who previously sold those $1, $1.5, $2 calls, and indeed even more of them, because we are only considering these three strikes. There are even other more. I mean, other ones you can see here below. They even these ones are the 2.5 and the $3 is still reasonable, but there's no for now. There's no danger. But indeed, other series as well. We didn't check other series as well, so they must add long stock to hedge. Okay, so that buying itself can push the stock higher. This is what people refer to as gamma squeezer dynamic. But we also must have to point out that um, these um, these are expiring January 16th. Obviously, saw that. Okay, gamma risk sharply increases near $1 plus. Right now, most of these calls are near the money or close to it. That's the danger zone for market makers. Okay, so say the stock goes from 0.95 to 1.05, deltas jump fast. That forces rapid hedge buying. If volume is already hot plus borrow rate is tight, price moves exaggerates. So near-term behavior is very flow driven. The short interest and borrow situation matters too. Short interest 17% and hard to borrow. That means borrow cost may be rising. Shorts may get squeezed or forced to reduce. Market makers who hedge short calls by shorting stock may find it expensive or impossible. So instead of shorting to hedge call buys, they may lean more on long stock hedging, which adds upside pressure. But market makers will also do this: raise option premiums, widen spreads. Okay, that means what you buy, the difference between what you buy and what you sell will increase. This is to reduce risk and discourage piling in. They may also adjust the volatility assumptions, implied volatility. That's why we see up here. I showed you up here. If you remember, they're already doing so. They're already doing so. You can see its implied volatility is 190%. Historical is 112%. Okay, so they're already doing that as well. So this is not it's not an assumption. It's real. What's going on right now? They are very much aware. Yeah, and balance books intraday, they may flip between buying stock when deltas rise, and then sell stock when deltas fall. So you see wild jerky intraday movements rather than smooth ones. The flip side, if price drops back on the $1, delta falls, market makers unwind hedges and then sell stock. So the same mechanism that pushes the stock, they pushes the stock higher, can also accelerate the drop. That's why these setups often look like vertical spikes followed by equally steep fades. Big picture summary. Here's what's most likely happening. Market makers sold a ton of calls. As the price gets near $1 plus, they must buy stock to hedge. That adds fuel to upside momentum. Had to borrow, and then plus shorts amplified effect. If the price falls back below key strikes, they sell stock to unwind hedges, which can drag the price back down just as fast. So market maker behavior here is mechanical, not directional betting. They just don't want to be caught naked. And yeah, this setup means volatility is likely to stay in knots because options exposure is lopsided. Hedging flows are large relative to float slash liquidity, and borrow constraints add friction. Retail momentum is round numbers like $1. So expect more and more volatility to come in the coming days. So it's a stock to watch for now. So this is its 4-hour chart. The stock is likely to going to print second straight session of gains. The extrapolation on this 4-hour chart is saying that it's going to go into a distributive contraction after rallying. After rallying from New Year's Eve into the second, and then into today as well. So it's saying that a distributive contraction should be expected on this 4-hour charts. Okay. Um, the momentum is picking up and is expected to remain elevated up till Tuesday, the pre-market session of Tuesday the 6th, and the 10 period for the 10 period moving average is rising at a pace of $14 43 every 4 hours, and is the buying pressure increasing. Let's see now. The pace. Let's see. This the stock is rising at a pace of $14 every hour, every 4 hours. The moving average is rising at $14 every hour. Let's see now. Buying pressure is increasing, yes, and the pace buying pressure is increasing. Is a pace increasing as well? Not, yeah, it's not really increasing. It has actually decreased. Buying pressure has decreased, yes. So that's what's going on right now. We just ran into that, and we just decided to update you with what's going on with ASST on the 1-hour chart as well. This distributive contraction is what is expected. Yeah, let's see. On the line trend on its daily chart is I think has gone bearish. Yes, okay, still bullish. I think still or maybe neutral to bullish. Yeah, neutral to bullish. Yeah. Okay, yeah. So just see what you make of ASST, and thank you very much for watching this video.